Welcome to the Transparent FX Academy. I'm Nick and I'm a top podder on TradingView with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about EURUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that at the moment the market is rejecting a quite strong historical structure level of support. In fact, what we can see is that starting from back here, the market, every time that it tested its zone, it rejected it to the upside quite aggressively, confirming every time that this zone is a very strong monthly demand and support area from which we could expect the market to create more bullish continuation away from this area. However, at the same time, what we can also notice is that in creating this move to the downside from this high to this low, there is one particular area inside of which the market clearly has shown that it has structure. In fact, we can see how the market created this green candle here during this massive bearish push. What this essentially shows is that even though here clearly sellers were in control of this market anyway, buyers started entering at this zone, printing this green candle. This means that this previous support is now turned resistance here, and what we could expect is for the market to go and test this area and then potentially to reject it to the downside as resistance and to respect it as resistance, at least in the short term, before then getting more bullish continuation away from that monthly support, as already happened all these times in the past. Dropping down on the weekly time frame, what do we have? From a weekly perspective, we can notice how the market has just created new weekly structure. In fact, what we had is this previous level of weekly resistance from which these previous rejections to the downside were created, which the market has now broken to the upside. So all this previous resistance is now turned support here. What we could expect in a situation like this is a potential retest of this previous resistance turned support, and then for the market to reject this area to the upside, creating more bullish continuation. Going down on the daily time frame, what do we have? Now, here on the daily, things get very clear. Now, first of all, I did speak about EURUSD quite a few times in the past. I spoke about it when the market was here, explaining all the reasons for which we could expect this move higher. Again, here, I explained all the reasons for which we could expect the creation of this higher high, which again is exactly what the market gave us. And then from here, I made a full breakdown explaining all the reasons for which we could expect this move to the upside, which again is exactly what the market gave us. And by the way, I will link in description all these previous analysis, so you can go and check them out for more free education. However, at the moment, what do we have and where we could be looking for the next potential move now? First of all, we have to keep in mind that the pattern that the market is currently creating in printing this move to the upside is this overextended W formation. Now, in general, after the creation of an overextended W, what you would expect is for the market to create a correction to go and retrace at least to the 0.32 of the Fibonacci taken on the impulse leg. Now, in this case, the impulse leg is exactly from this low to this high, giving us a 0.32 retracement exactly here, which would be the first downside target for the completion of this overextended W formation. Now, keep in mind that all this resistance area here is resistance because on the weekly, there is that quite important structured zone. That means that there is good probability to see a potential correction to this area. And keep in mind that that resistance that I'm speaking about is also this one here, the one that we have identified at the beginning of the video. So this green candle here. So we have an overextended W formation on the daily time frame testing this monthly resistance, from which there is a possibility to see a potential reversal lower. Now, If we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market, the first thing that we have to recall is that if we're checking the data for the euro, we are actually already checking Euro USD because all currencies on the spot are traded against the USD. So if we're checking the data for the euro, we're actually already checking Euro USD. And what we can see is that with the last reports, we went from 187K net positions all the way down to having 142K net positions, showing a massive decrease of net positioning, meaning that institutions are moving to the bearish side of this market, making it weaker, meaning that we could expect potential bearish price action to be created away from the monthly resistance and weekly resistance and daily overextended pattern that we have just identified. So how we could be approaching this potential reversal lower. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the upside, waiting for the market to shift from an intraday bullish market as we would have to an intraday bearish market. And if the market would shift from an intraday bullish to bearish market and provide to us one of our valid entries, at that point, we could be looking for a potential move lower for the market to retrace at least to this 0.32 of the Fibonacci taken on this overextended W formation. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here, past the testimonials, you will see that at the moment there is a massive special promotion in which you have a huge discount on the upfront price of the mentorship program from $497 all the way down to only $97 one-time payment. And as an option, since I have partnered with the Forex broker Blueberry Markets, if after you join the mentorship program, you open an account with them, you can get a full refund credited back into your trading account. And if you scroll lower, you will see that directly from here, there is the timer, and you can see that there is still time to join before the offer expires and price goes back to normal. And directly from here, there is the button to join in order to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board. At least you're supposed to go and check it out at transparentfxtrading.com. The link is also in description. If you enjoyed the video, make sure to smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. And I will see you in my next breakdown.